Hello and welcome to Market Today. I am Siddharth Zarabi and with me now is Debadatta Chand, the Managing Director and Chief Executive Officer of Public Sector Lender, Bank of Baroda. Welcome, Mr. Chand, to our post-results analysis on Market Today here at Business Today Television. Take our viewers through your latest set of numbers and the key highlights.
So thanks, Mr. Siddharth. So absolutely, as far as the bank for FY24 is concerned, the bank had a very strong growth. The performance is mainly on the book. There is a strong growth. At the same time, the profitability has been very strong. If I look at the advance growth has been almost 12.5%, whereas the operating profit growth has been 15%. The net profit growth has been full year 26%. At the same time, the asset quality is much better now. So to sum up everything, the bank has a very strong FY24 performance.
Mr. Chand, how did the Q4 specifically do as far as profitability and margins are concerned?
See, the margin has been if you look at the Q4 margin vis-a-vis the Q3 margin, there is improvement from almost 3.10 to 3.27. At the same time, the ROA, the exit ROA for the quarter also at 1.25. So when I look at the quarter profit, there is growth, but normally when we talk about the March quarter, it's the full year which is material. So if you look at my full year net profit, the growth is almost 26.1%. And we are almost at 123% of the full year profit of the last year. So that talks about something, the strong financial business model for the bank. And in terms of parameters wherein the bank is able to rather, we upsize our ROA guidance from 1 to 1.10 at this point of time, and maintaining the NIM guidance the same as the last year, which again we have delivered. So I think on the profitability, the Q4 and also for the full year, it has been a very strong quarter for us. And a strong full year for us. And we are also guiding the same way going forward. We need to maintain, sustain this profitability. And that is what our guidance has been.
Okay. Mr. Chand, there is a upwards pressure that we can see as far as cost of deposits is concerned on a sequential basis, Q4 versus Q3. Do you expect the cost of deposit scenario to continue to remain elevated? What is the scenario that is likely to prevail, in fact, not just in the current quarter, but going forward?
Yeah, that's a very fair point, actually. If you look at the quarter in terms of the cost of deposit, it has gone up. And obviously, in a scenario like this where the deposit get repriced with a lag, I think the full impact of the price pressure has come on the deposit as on March 2024. So going forward, I think the cost pressure won't be that much. The reason being, we have an outlook where we think the interest rate would slightly moderate, not on the rate side, but better liquidity scenario in this financial year. And almost all my deposit are priced in now. All my deposit have repriced now. So in that way, I think even if we had a cost pressure, but then margin was impact, rather we had a better margin for this quarter. And going forward, I believe that will sustain this, like we are giving the same margin guidance. But again, I believe on the deposit side, I think there won't be any pressure on the cost of deposit in the coming quarters, because a major part of the deposit have been repriced now. So absolutely, in terms of the repricing, rather we'll get a positive benefit rather than any negative. That is what our thinking is on today.
Hopefully market participants will take note of that point that you make on cost of deposits. Let's also look at asset quality. There's the financial year 24 has seen significant improvement as far as asset quality is concerned. How do you see the performance on this front in the current quarter and for the full year? What kind of outlook can you offer for our viewers?
See, there are two things that we already guided the market, that our slippage ratio continue to be 1 to 1.25, and the credit cost going to be less than 1. And if you look at the full year slippage ratio, it is at 0.99. And the GNPA, Net NPA has been continuously trending downward for last 8-9 quarters now. So a scenario like that, wherein the bank is able to manage its asset quality, we had a recovery target of 12,000 crore, which we exceeded last year, and this year we are giving a guidance of 10,000 crore also at a lower, what you can say, GNPA base. So a scenario like that, I think the asset quality is well maintained. Secondly, normally people look into a factor called stress book as on 31st March. If you look at the stress book, which consisting of the SMA 1, 2 as per CRILIC, which we have declared to the market, and also the standard structured book, it has significantly improved from March 23 to March 24. It was almost 2.04 as a percentage of global standard advances, which has gone down to 0.92. So the portfolio at risk is much lower now. So in a scenario like that, I think the guidance that we are giving for a better asset quality going forward will hold on to that. At the same time, I think there should not be any headwinds from anywhere, particularly on the geopolitical vis-a-vis the asset quality. So we have a better control on the asset quality, and it is consistent also for last many quarters. That is what a point that we should take a note of that. And there are the entire recovery mechanism has been strengthened. We do have a collection vertical looking at all this SMA 1, 2. So the collection efficiency has been pretty good at this point of time for all verticals I do have. So in that scenario, I think we'll maintain the asset quality in the same manner. Rather, I also think that having achieved a GNPA less than 3 as on today, as on March 24, we'll be trending towards 2.5, but we are not telling a guidance per se, but then our efforts would be to trend toward a lower GNPA, maybe around 2.5 from some couple of quarters from now or years from now.
Okay, that's pretty heartening to note. A key headline there, trending towards 2.5. What explains this very significant increase in provisioning at almost 1,485 crore in the fourth quarter versus 320 in the same period a year ago? Is this on account of the aviation account, and has the entire hit been digested?
Yeah, that's absolutely what exactly you said. If you compare the full year provisioning FY24 vis-a-vis FY23 and this quarter like Q4 vis-a-vis Q3, what we said earlier that on the aviation account, the non-ECLGS component we had fully provided as on 31st December 2023. On this quarter, we have also made provision on the ECLGS component. So now this account is fully provided as far as the exposure is concerned. But we also said that because the account had a high collateral, on the probability of recovery that you are looking from this account is quite high. So anything happens on this front would be an upside for us, like as the account has been fully 100% provided. So the change you are looking at full year and also for this quarter is precisely for this particular aviation account.
Okay. As far as domestic advances are concerned, it's up almost 13% YoY, and your global advances have also grown, as I understand, by 12.5%. Can you give us some more detail on that, a breakup, and which specific vertical is getting you the most traction?
Yeah, that's as far as our business model, the advance growth is consistent with regard to the business model of having a strong book increase. Right. If you look at March 24, the domestic growth is 12.9. The international, we said earlier, we are going to moderate at 10.5. The overall growth is 12.5. And as far as the guidance is concerned, we have said that we are going to have a growth of 12 to 14%. So within the overall advance book increase, we have already said earlier also, our retail advances growing faster, actually, in the sense the last 8 quarters, the growth has been in excess of 20%. So that's continued to be the focus area as far as the bank is concerned. The bank would like to have more retailized book as compared to what it is today. At the same time, the pipeline cases or the corporate advance has been quite strong, and that has happened for last 4, 5, 6 quarters now. At the same time, as FY24-25 is concerned, we are also going to slightly more focus on the MSME and agri advances. We'd like to grow slightly 1 or 2% higher than the growth that we had in the earlier years. So with that, I think we'll be in a position to grow at the guidance of 12 to 14%. Rather, we'll try to optimize on that front. All would depend upon the growth in deposit, which is again one factor when I decide on the growth of advances. We calibrated the advance growth, particularly the last year was a challenge in terms of the deposit growth. Otherwise, the potential to grow is much higher, particularly on the corporate advance. So we are very positive with regard to the opportunity the economy offers to us in terms of growth in book. At the same time, our international book would be aligned to the domestic growth. So overall scenario is quite positive, and as far as the guidance, we are giving a 12 to 14%, and we'll try to optimize that.
Okay, just a couple of quick questions more. One is the regulatory ban that was on the mobile app has gone. And now, what do you expect as a result in the current quarter and going forward?
So that's why, if you look at my one impact of that is on the retail saving, right? So, but then earlier also I said that we have multiple channels to strengthen our channel customer acquisition. So if you look at my CASA growth for Q4, it is better than the full year growth. So in other words, I can say that my channels performance, my focus on the retail branches in terms of mobilizing deposit, the focus is clearly therein. So going forward with this ban now removed, we will further optimize that. So we are rather putting our CASA growth in excess of 8% for this year. So which again will be in a position to achieve that. Two things that we have done on the deposit front typically, which is helping us at this point of time. One is that we have differentiated our product offering on the retail side, both on the current and also on the saving and also on the term deposit. At the same time, on the service side, we backed up many of the branches with the relationship manager concept. So there are people who are sourcing deposit now for the branches. So both the strategy help us in terms of slightly performing well in the market. At the same time, we'll be again further focusing on these two aspects so that we grow faster than what we did last year.
Okay. The draft guidelines that the RBI has issued, how do they impact you given whatever exposure you may have to project financing?
No, that's a fair, but then we as a policy say that it is a consultative process of a draft guidelines, so we have no comment to offer at this stage. Even if the impact, it would be a couple of basis points on the credit cost, which is easily manageable as far as the bank is concerned. But then we are looking for a final guidelines and then reassess, evaluate, and come back to the market on that.
Okay. One final point, if you could sort of comment about the overall outlook for the current financial year, including any fundraising plans that you may have.
Yeah, as far as capital, let me tell that my CRAR for March 24 is 16.31, which is a fairly satisfactory level. So as on today, I don't see any like a equity raise or anything for the matter. Maybe to some extent we are going to replenish our maturing the tier 1 and tier 2 bonds. But again, we are going to come back to the market on this with regard to anything on the capital through the process. But again, we are looking at a scenario, we are planning for a 5-year business plan, at the same time trying to prepare ourselves for a ECL framework. At that time, if anything request on the matter, we'll come back to the market later.
All right, Mr. Chand, and we'll also be waiting for future updates, including the quarterly earnings that you share during the current financial year. Thank you very much for your time with us today. Viewers, with that, it's a wrap on this quick decoding of Bank of Baroda's latest numbers. And we'll see you again just after a very quick break.
If you like the video, do like, comment, share and subscribe.